Oh, hey, that time it worked. Okay, so what up, you guys? Once again, my camera kind of broke, and that is also why the mic sounds watered down, because my camera was breaking. So I'm just using the camera's mic because it wouldn't let me plug both in for some reason, like it usually does. Hopefully that fixes itself by tomorrow. But whatever, you're just gonna have to deal with the watered down mic like I would do if I was trading over there, like on my bed or something. But I actually am in the middle of watching TGR's trade today or yesterday, so I'm gonna finish watching that live on stream, and then yeah.
Happened. There was no high time frame liquidity sweep, nothing. So that leads me to waiting for Federal Chairman Powell's speech. So Federal Chairman Powell got on the pulpit at 14:30 right here at 2:30, and I had marked out, and I'll go ahead and pop up the screen recording again. I'm trying to be as transparent as possible with you guys here. I'm going to pop up the screen recording of me marking out the box here on the S&P 500, and then also me marking out the box here on NASDAQ. Okay, I marked out these levels of consolidation. Okay, I marked out these levels of consolidation because we had, boom, the FOMC decision. Everybody already saw that, and then we were going sideways. We were pretty much creating an area of accumulation before Federal Chairman Powell got on the stage. Federal Chairman Powell gets on the stage on this candle, and then whatever, he says his greetings, and then boom, instantly says something extremely bearish. Now, I marked out this box, and then as you guys will see on the screen recording, I put on two different paths that the chart could go. I put a path that with like the little arrow tool that we would either break out of this box, come up and sweep out these highs and then go lower, or we break out of this box, go down, sweep out the hourly lows over here, and then go higher. Okay, now you're probably saying, well, we broke out to the upside and then we went down. Yes, that's true. However, when we broke out to the upside, we didn't take out any of these significant draws on liquidity. We didn't even sweep out FOMC highs. We actually broke to the up, or didn't even break to the upside. It was just like a fake out to the upside. But where did we actually take out significant draws on liquidity? It was to the downside. We took out draws on liquidity down here. We took out draws on liquidity down here. Okay, that is what the sweep was, and that is what I based my trade off of, because I needed a high time frame sweep of liquidity for me to take a trade. So you're probably saying, why didn't you take shorts? Well, initially I wanted to take shorts today because that was my assumption. I thought we were going to come through, sweep out these highs, and then go down and then target the new week opening gap that we had, but that wasn't the case. We ended up making the high time frame sweep to the downside. So as you guys will see in the screen recording when I pop it up, I'm constantly writing, oh, I need these highs to get taken out for me to take profit. Oh, I need these highs because these were the significant draws on liquidity to the upside after we had taken out the significant draws on liquidity to the downside. So once we ended up moving down, that's when I ended up entering into long positions. Once we broke structure to the upside right here, that's when I started entering into my longs. So that was the first trade that I took.
Wait,
I ended up entering into long positions, structure to the up, significant draws on liquidity to the downside. So once we ended up moving down, that's when I ended up entering into long positions. Once we broke structure to the upside right here, that's when I started entering into my longs. So that was the first trade that I took. I ended up entering into long positions right here. I entered long right here. I had my stops underneath these lows. Pretty big stop loss, but I wanted to target all of these highs up here. Okay, that was my first trade. And then I'm going to go ahead and pop up the screen recording one more time as we.
So he entered on a break of structure. What? His entry was on a break of structure? Guys, what? Is that a valid model? I guess. I mean, it's like entering on a CISD, I guess. That is interesting. Never even thought to do that, but yeah, apparently he entered on a break of structure. Dang.
Fast forward through time here, I marked out.
Hang on. Yeah, that's crazy. He entered on a break of structure. Dang. I don't even know if that's like how he normally trades or not. But okay. Alright, let's keep watching it.
Out this inverse or potential inverse gap, and I'll again this up here. Okay, that was my first trade, and then I'm going to go ahead and pop up the screen recording one more time as we fast forward through time here. I marked out this inverse or potential inverse gap, and again on the screen recording you will see that I said if we inverse this gap I'll enter long again. So we ended up inversing that gap. I went long again right here.
So he was just targeting an obvious high time frame draw liquidity, which makes sense, like reasonable thing to do, but basically he just Every time there was a long opportunity, he entered long and just said, yo, we're going to that draw on liquidity. We're going to that draw on liquidity. We ended up going to the draw on liquidity. Teacher filmed this on iPhone 1. Yeah, bro. Guess so. Sorry for the light not being on. I don't know why it's not on. But yeah, watching this real quick because I haven't seen the whole thing yet. But crazy because he entered on a break of structure, an inversion for value gap, and then he's just basically saying like, send it to the draw on liquidity, send it to the draw on liquidity. Like I don't even. He's basically just like, he's over here with his sniper. He's like, okay, all right, you know what? I bet we're going to that draw on liquidity. Boom, boom, boom. Huge target, right? Ended up working out for him, which is cool. But basically he just sent it to a draw on liquidity with some like random frickin' entry. He just sent it to a draw on liquidity with random frickin' entries, and you know what? It worked out. So good for him. I don't think these are like quality trades. I think he's just sending it to a draw on liquidity based off of literally whatever confluence he could find, and cool. I'm glad it worked out for him, but I don't know, man. Maybe not the highest probability stuff, but worked out. On a plane filled with snakes. What do you mean by that, bro? Also, what up, Kirk? Good to see you.
And then I ended up moving my stop loss underneath these lows and then moving my stop loss from these lows down to these lows because we ended up making a 5-minute retrace. Let me go.
That is so interesting. He moved his stop loss down on one position and moved his stop loss up on the other position, which actually, it makes sense because that's a swing low. But you can tell he's basically just entering off of whatever confluence and saying, yo, we're going to the draw on liquidity there. It's pretty obvious we're going to the draw on liquidity. Just YOLO. Send them in. Send those orders in. We're going to that draw on liquidity. And, it's a pretty safe, it's a decent way to trade as long as you're right. It's a decent way to trade if you're right about the draw on liquidity. But once you're wrong, you get wrecked. So I'm not going to say it was without risk.
I went long again.
Just in time
right
for
here.
the mentorship to drop.
Boom.
But what I'm saying is it's not really like he wasn't, it wasn't like precision trading. You know what I mean? Like the type of trades that we backtest in our backtesting sessions, those are precision trades. Usually right when we enter, it's like snap right to the draw on liquidity. This is more just like, yo, I can tell we're drawing there. Whatever confluence I can find, I'm gonna send it to that draw on liquidity, and it worked out for him. So good for him. The man is a goat among men. I don't know what you mean by that.
And I ended up moving my stop loss underneath these lows and then moving my stop loss from these lows down to these lows because we ended up making a 5-minute retrace. Let me go over how I exited this trade first. So we have 2 entries right here with our stops now underneath these lows. We have 1 entry right up here with my stops underneath these lows. At this point in time,
it's so interesting. He averaged up, bro. He went enter and then another inversion and then he entered higher. But I mean, I guess he had conviction, so that's cool.
Going sideways, I knew that I wanted these highs. I kept squiggling my freaking cursor over it. I'll pop up the screen recording of me saying, I need these highs, I need these highs. That was my overall target for the day. I wanted these highs to get taken out. That's why I have this green box here. I wanted those highs to get taken out, okay? And the entire time I was like, this looks great. We took out the high time frame draws on liquidity to the downside. We broke out of it. Things are looking good. This is exactly what I expected.
But that's crazy. He entered on a break of structure. I've never even seen him do that ever. Which it's fair, like, I enter on change instead of delivery, but like, but I've never seen that before. It's just it's interesting. I've never seen someone enter on a break of structure before.
Gap here. However, I got super fucking spooked because we ended up making a 5-minute bearish SMT divergence from these highs to these highs, while on the S&P 500 we had these equal highs right here down to, bro, and I'm so fucking good at this, dude. I'm so nasty. Down to these highs. When that SMT divergence was formed, and notice I still have this marked out. I made sure to keep the majority of my drawings on here just so it was easier for me to remember. But once we made this bearish SMT divergence, and once we inversed this gap on the S&P 500, so at 1528, I closed out of that first trade on NASDAQ. Okay, I closed out of that first trade on NASDAQ, and that trade, I really did not make that much money on that trade. I was only able to make around $32,000. So as you can see, so I ended up closing all 3 of those positions. So the 2 entries right here and then the 1 entry right here on this candle right here.
32,000 for me would be like That'd make my year, bro. That's crazy. But nah, it's valid because that's how much he's trading, right? Nah, but no, it's smart, bro. It is smart, Kirk, because here's the thing, right? He What happened is he basically said, "Yo, I need a huge winning day so people can buy my mentorship. I kind of just need to take trades that are just YOLO trades to withdraw on liquidity, which, I mean, if you know anything about trading, you know that, like, draw on liquidity is probably the easiest part about trading. You can identify the draw on liquidity, I don't know, 8 times out of 10 you can identify it. That's the easy part about trading. So you can take trades like this where you YOLO with a big stop loss, and you can be right, and that's what happened here. But he knew, right? He knew if he took trades like this, YOLOing towards a draw on liquidity just off of whatever confluence he could find, well, he'd get everyone to buy his mentorship. And I'm not trying to hate on TGR. I love TGR, but that's definitely what happened here, right? He's like, yo, like if we just enter off of whatever confluences we can, targeting draw on liquidity, just make it look like I can trade really well. I mean, yo, it's worth the risk for him, right? Because then he makes like triple the money. It's like an immediate 3R off of whatever he made on the trade because, you know, all the people will buy his mentorship. So you're not too far off with that. I'm not even gonna lie, Kirk.
So this entry, I ended up losing money because I was in drawdown. I probably ended up closing down here, but both of these entries, I was in profit. So I ended up making a small amount when off of this. Now, onto...
So he closed some right here off of this first trade, I guess.
The next thing, losing money because I was in drawdown. I probably ended up closing down here, but both of these entries, I was in profit. So I ended up making a small amount when off of this. Now, onto the next thing that you guys will notice in the screen recording.
Wait, he closed out of everything? I guess so.
Actually pre-predicted this bullish SMT forming. Now, I was spooked of the bearish SMT. I wanted to get out with some profit and then just reevaluate everything that was going on. So after that bearish SMT, I still wanted those highs. And I wanted those highs even more because the S&P 500 now had equal highs on the 5-minute time frame and then also low resistance highs on the 5-minute time frame. And then what did I notice? I saw the S&P 500 come down, sweep out these 5-minute lows and then make lower lows, while on NASDAQ, we did not sweep out those lows, in turn making a 5-minute SMT divergence.
Like,
okay, we ended up making a 5-minute SMT divergence. So these were the lows that swept out these lows on ES, and we made this 5-minute SMT divergence. Again, I'm going to pop up the screen recording of me writing out possible SMT divergence if ES sweeps out these lows on my trading view while I was on the plane, predicting that this would happen. I thought it was going to happen on this move down, but it actually happened on this move down. But regardless, I was still able to predict that there was going to be an SMT divergence off of these lows. Now, once we created that SMT divergence, bro, this is when I went right back in. So once we broke structure to the upside on this candle right here, boom, max longs again. I ended up taking 3 long positions with my stops underneath these lows, with my targets being these highs. Okay, I entered into 3 long positions right here, with my stops being underneath these lows and my target being these highs up here. And then the rest is really history because we had that 5-minute SMT divergence. The entire time, I really wanted these highs, really freaking bad. We ended up getting them. And actually, bro, funny enough, I was panicking because price came up right here. I'll show the screen recording of it. Price came up right here, swept out these highs. And after we swept out those highs, I was like, fuck, we started making candlesticks down and ES didn't sweep out these highs. And I was like, oh no, it's an SMT divergence. It's a bearish SMT divergence. These are the only highs that we're going to take out. Price is going to actually end up going down now. And I didn't have fucking connection. I was trying to close my trade out right here and I didn't have connection for like 3 or like 2 minutes. And so I'm just watching and waiting, and then I finally get connection back on this candle, and I'm like, bro, now like I don't want to close because I'm so much lower from my take profit point. So I was like, fuck it. These high time frame highs haven't been taken out. These FOMC data highs haven't been taken out yet. I'm just going to sit here and hold. And then price ends up ripping up, hitting these highs. And then once we hit these highs, again, I'm fucking panicking. I'll show the screen recording. My trade locker isn't reloading. I don't have Wi-Fi. I'm reloading. And then while this is happening, I'm trying to close out my trade, and then price ends up ripping all the way up here, hitting full take profit, and I'm actually able to close all the way up here and like top ticking it. And then as we can see, right after that, price ends up dumping down. I got really fucking lucky with that exit. I probably should not have made as much money as I did on this trade by being able to get out up here when I did, but shout out to Delta Wi-Fi when they ended up working. I'm never going to trade on a fucking plane again. And that pretty much gives you guys the full entire trade recap of how I made 400.
I'm proud of bro, but he really just took whatever confluences he found and then just YOLO'd to draw on liquidity. I'm not saying that's not... Hey, it worked, bro. It worked. Valid. I mean, I can't. Hey, I can't make $400,000. So it's impressive, bro. It's impressive. Not saying it's not impressive. It is, bro. I can't. I can't do that. I can't make 401,000. But yeah, entering our break of structure towards drawing liquidity. Who would have thought? Just that's all it takes, man. $400,000 off a break of structure to draw liquidity. Okay, let's start reviewing the market, guys. Hopefully, you guys enjoyed watching that with me. That was interesting. I'm not gonna lie. But we're gonna review price action today. See what we had going on. You know, there's gonna be a lot of interesting stuff to review today. Yeah, this is very interesting trading day. So we'll jump right into it. First things first, guys. Remember the vol model? I talked about this. What? On stream today. But this, I mean, guys, this model might actually be cracked. The more I study it, the more I learn about it, the more I think about it, it's like, it just makes sense. When price is breaking out, but you know it's high resistance, and you get a higher probability using true opens, you're basically limit selling someone else's market buy when they're market buying into high resistant liquidity, and then they basically, you know, obviously they become liquidity at the data low. Common sense, right? Plane plus snakes plus iPhone 1 equals riches. Hey, bro, he made it work. He made it work. No hate, no hate, no hate. So that, you know, that happened. Obviously, that'd be difficult to take for real, but yeah, let's go ahead and look at just like New York session, I guess. So New York session. So first things first at 9:30, or this was today. Yeah, so 9:30 we get this leg down. It was really just a down move and then an up move. That's really what it was. So why did the move down occur? Do you guys know? Well, remember we talked about this. On the 12-hour, we had pretty clear CRT with these two candles. So 12-hour CRT ended up completing right there. And so that was kind of the immediate draw on liquidity. And you see how the 12-hour CRT was exactly where the market went to. So let's draw this box out. Yeah, so 12-hour CRT right there. See how we draw down perfectly to that? Interestingly, we actually get a 5-minute CRT to the upside. Honestly, I didn't even see that. Dang, bro. So 12-hour CRT completed right here. Let's actually make a note of this. Man, in all honesty, this 5-minute CRT in hindsight, oh, that makes me so jealous. Like, was that just not super obvious? Am I just stupid? Like, this 5-minute CRT to the upside is so obvious in hindsight. Alright, we're going to mark out that 5-minute CRT next. Because what? $12-hour CRT completed. Okay, so this is what I'm referring to, right? We have first of all, right? We have our high time frame draw on liquidity taken out, right? So this is our 12-hour CRT low. So we end up sweeping this. And then we get 5-minute CRT back up. Look at that. Man. How sweet is this? Interestingly, I like to take the or whichever's lower of the open or close, but this time we actually don't go below the whichever's lower. So this is an interesting example of maybe you have to take the open or the close instead of the open. That's why it's always a learning process, right? But we have two down close candles here. So what is this? Giant 5-minute CRT sweep, and then yeah, usually I take whichever's lower, but in this case, I guess the open worked better. So I'm still gonna consider this Genesis, right? I'm still gonna consider this Genesis model. All right, so bang, bang, back down to, let's go down to maybe the 30-second. That should be good. So we can get a really good picture of what actually occurred here. So 9:30 to 10 o'clock, or not 10 o'clock, to 9:40. This is our candle range, right? So CRT range. Okay. Then what? We manipulate the low out. Okay, cool. What happens next? So we take whichever, or in this case, we take the open. Interestingly, right? So this is below the open. Wow, look at how time and price align here, right? So manipulation. And then right at 9:45, by the way, what is that? That's a 369 time. Wow, that's actually crazy. So 9:45. What's 9:45? That's a 369 time. So what's Genesis models? Just for anyone who's no idea what I'm talking about. So basically, you have the initial candle range when you get a candle body, or when you get a sweep and then candle close back within that range. Basically entering right below this is going to be high probability to target the opposing side of the range. Usually it's whatever's lower, but in this case it was below the open. That was good. Hey, thanks Ethan, appreciate it. So I guess maybe mark it out like this. Ooh, so now we're cooking. Now we're cooking. You guys see this? Now we're cooking. I mean, that's the precision with that is insane. Is that not? So this is when the new candle forms, right there. I don't even know what the Yeah, I guess we'll just mark it out like that. So, initial candle range. So 5-minute CRT range, two 5-minute candles. We take out our high time from drawn liquidity. Let's just mark it out as a regular sweep. And then manipulation candle back within the range. And then what, right? Then we get this entry right here, which is also a 2022 model because we get a break of structure and then a fair value gap. It's crazy how that all lines up. So 2022 for value gap, 30-second. So this is combining Genesis model with CRT. And also with 369, because what's this? 945. This is a 9. So 945 equals 9 plus 4 plus 5 equals 9. That's precise, guys. Very precise. That's pretty cool. I'm not even gonna lie, guys. How can you get more precise than this? No. So the way you take Genesis is honestly you enter either below the open or the close, whichever one makes sense to you. And then you target the opposing end of the CRT. That's 6-1. So yeah, I'm changing Genesis model to be enter below the open or the close, whichever one makes sense to you. In the given the context of the situation. That's pretty sick, guys. You took this trade? That's crazy. That's crazy, Kirk. That's impressive, man. It's impressive. Did you take it as a 2022 model, or how did you take it? So I'll mark it out as both because it's both a Genesis model and it's 2022 model. So 945 Genesis model, 5-minute aligning with the 30-second, but it's also same thing. It's a 2022 model on the 30-second. It's both. Crazy, man. I mean, crazy. So 2022 model. What is this? 2022 model. 945, which is a 369 time. 30-second. So you guys write down 945 for your notes because 945. It's a 369 time, and you know, valuable time to remember. It's a 9, right? I care about the 9s the most. Let's see here. Where's our... Here, I'm just going to search for it. Important times. Okay, 945. And then I'm going to put in brackets, could be a 5-minute CRT. Right? Kind of cool. Okay, what do we look at now? Or should I take a break? Let's see. Let's see if there's people watching or not. Oh, there's 5 watching. That's a lot. Okay. Let's keep going. Man, the precision is crazy. Y'all are quiet for 5 of you guys watching. So, what happens next? We obviously start displacing higher. We can even go on the 15-second, and well, what happened? Clearly, this was maybe more obvious as a, oh wow, it's maybe not, maybe it's, there's not even a gap on the 15-second. So it was most obvious on the 30-second. We rebalance this price leg from here to here. Fair value gap and discount, and then we go higher. What happens as well? Well, wait, let's actually measure out this whole thing. So fair value gap and discount, we probably tap OTE. See, look at that, OTE tapped. So this is your, right down here, let's make a note of this. Right down here, what was the bottom? What was the bottom? This is your typical ICT OTE, meaning we measure out the displacement leg of a 2022 model, and we find OTE of it, and that's going to be sensitive. This is your regular OTE. This is just when you have a 2022 model, measure out the displacement, find OTE of it, it's going to be sensitive. So I'm going to take note of this. That actually played out really nicely. So like if you want to, with a 2022 model, if you want to get extremely precise, you can enter at, instead of entering at equilibrium with the 2022 model, you can enter at OTE of the displacement with the 2022 model. Yeah, so this was 1030. So OTE of the displacement leg was nice. Regular ICT OT for the 945 2022 model. Okay, I'm gonna go use the bathroom, get some water, and I'll come right back. All right, let's keep going. Yeah, pretty cool how you see that regular OTE working out. Just measure out displacement, find OTE. Obviously, this was a very low time frame trade, not necessarily high probability, but I like to observe things that occur in the market, right? Because that's how we learn. All right. So, oh, let's actually go back. I want to see true opens. Like, were true opens helpful at all for this? Let's see. So we have, yeah, we're below 922. So that's our 90-minute true open. So that was relevant. And then I guess we have a 951. So that doesn't happen till way later. So the other true open is 928. So we're below both of them. Okay, we're below both the 922 and 928. It's worth looking at. Then what happened? Then we moved higher. Initially, right, I was kind of thinking, yo, we might expand. But now that I'm looking at this in hindsight, oh, we gotta talk about this 2022 model to the downside. This was so cool. This was so cool. Yeah, now we gotta talk about this, right? And this is the main reason why when the trade happened, that I ended up taking. When I saw this, that's why I got out for only a third loss, because this 2022 model to the downside was just brilliant. This was a brilliant trade, and I'll show you guys what I mean. So here's the 90-minute true open. Here's 951 true open. What do I like to say? When we get a 2022 model that perfectly taps equilibrium, that's actually mark it out like this. That perfectly taps equilibrium. You can mark it out like this though. Which perfectly taps equilibrium. Let's see, actually mark it out like this too. Yeah, I mark out this specific displacement, right? When we get a 2022 model that taps equilibrium above the true opens, I mean, guys, this is one of the most powerful signatures in price that there is, guys. This is the textbook 2022 model. I mean, he doesn't talk about the true opens in the 2022 mentorship, but this is what's gonna happen. The true opens are very, very relevant, and you might not think that they are right now, and that's fine. But guys, go back test it. See how the 2022 models, they're going to position themselves right. The entry is gonna at equilibrium is gonna be right past the true open or at OTE, right? And the more you see this occur in price, the more you realize, wow, this is perfect. It's insane, but it is. It's true. Now 730. We did not go above 730, but you know, it's because 730 is all the way up there. That also was a retrace into a 15-minute premium civvy. Ooh, that's a great point, Kirk. Yeah, so when you look at it in this in this lens, you have to ask yourself, like, yeah, the market wasn't wrong here, right? We retraced into premium. Yeah, there was an RTH gap, but we were not ready to go through this actual fair value gap. This is a gap, a fair value gap. We were not ready to go through it, and that was a mistake of me, right? To assume that we would go immediately through this gap. I have to learn, right? So 15-minute fair value gap. Beautiful observation, Kirk. So we're delivering from a 15-minute fair value gap. Oh, and I think the cherry on the cake was actually that this actually might have been the FEG partition. I actually think it might have been. Let's check real quick. I don't know for sure, so you don't quote me on this, but it might have been. And I think that was like the cherry on the cake for like why I knew that I was offside. Could be wrong. I actually think we might need to go. Do we need to go up a dealing range? We might need to go up a dealing range. No, actually, no. This was the fair value gap partition right here. I mean, that doesn't really fit in the dealing range though. But this was on this. What is this? The 81. We were within the fair value gap partition. I kind of want to see though. I think it was a higher time frame one then. Either way, that was within the fair value gap partition, right? Okay, up one. Oh man, yeah, this one's a little too big, but yeah, it was kind of like this was the OB, and then we tapped in the OB. Anyway, right? It was very obviously a 2022 model, and for those who don't see it still, like if you don't see the 2022 model, let me show you, right? We have pretty obvious highs here that had stop losses, right? These are low resistance highs. We swept them out. We even sweep out these highs too. So all of this is a giant sweep on the high time frame. We sweep out these highs. Like you can mark it out in a million different ways. Honestly, I'd probably just mark it out like this, right? So we sweep out these highs. And yeah, sometimes an external sweep of liquidity for the 2022 model is like, sometimes it's better, right? Sometimes it's nicer. Just kind of depends. Backtest it. Mark it out like this, actually. So we sweep out those highs into a 15-minute fair value gap. Then what happens? Displacement lower. Here, maybe you're not convinced we break structure, but here it's undeniably obvious that we break structure, right? I mean, either way, it's a break of structure, but this one's very obvious that we break structure. And once again, you could maybe say that one was, but I'm just gonna mark it out like this. Actually, you could even mark it out, you know what? It might make more sense to mark it out on the internal side of the curve here. So like liquidity sweep, like that. I like that a little better maybe. Break of structure. Let's do it like that. And then fair value gap, right? 1 minute, 30-second fair value gap, perfectly placed at equilibrium. You could have your stop loss literally at that candle. And yeah, the rest is history, guys. It's crazy. And I would enter right above that 922 true open. That's where I'd enter. So how could you know how far down we were gonna go? Well, you could project out the highest order block there. So I'd either project this one out or this one, kind of whichever floats your boat. I maybe project this one out. This is maybe gonna give you more precise levels. Let's see what would have happened if we projected this one out. Probably would go like that. 1, 2, 3. Okay. So I would go with this one, and then yeah, just honestly, I'd probably still be holding is the weird thing. I'd probably, you know, maybe try and hold for this low, and I guess that would have been a mistake because it went back up. So in this, what's the lesson here? Honestly, maybe just going for 2R is perfectly fine in a situation like this. I think that's the lesson, right? Just see this, go for 2R, you're done. You don't need to go past this. This is sometimes simplicity. You don't need to hold for the grand slam. Even on 2022 models, sometimes the simple trade wins. Sometimes the simple trade to make the bank is what will win in the long run. So with that in mind, I like just taking profit right at that low, taking it at 2R, entering right at that sniper equilibrium entry above 90-minute true open at equilibrium above 951, and we basically soup this 952 true open, stop above that displacement candle, and I target 2R. And actually the cool thing about this is it's actually almost 3R. It's actually 3R. You would not even think that that'd be 3R, but that was 3R. Insane. Insane. So yeah, I actually really like this. Once again, we kind of have an external sweep of liquidity as well. Yeah. We obviously go lower off of this. So I would do it like that. It's kind of more of an equilibrium snipe of a 2022 model, but I'm not gonna name them that anymore. I'm just gonna name them regular 2022 models, just 2022 model. Whether it's equilibrium snipes or not, it's still a 2022 model, so I'm gonna start marking it out like that. So bang, down to 2 projections and that low. You could have targeted further, and you could have made money, and that's great. But like honestly, sometimes you just gotta focus on actually making money instead of making $1 million in one trade. Like that's something I need to work on a lot, honestly. So I'm gonna be continuing to work on not ending up like that, because I do that a lot. I'll go for these, trades when in reality this is not, to win the Super Bowl or the World Series, you got to play hundreds of games. To make $1 million, you got to take hundreds and thousands of trades. Same concept. So I should not be going for these necessarily crazy trades. Just go for what makes sense in the context. And even in this context, that's still a 3R. That's nothing to be upset about for not taking it to, like, 3R off of this. That's fantastic. Why should I care if it's not going all the way to that low? This is 3Rs enough to cover 3 losses. I shouldn't care. You know what I mean? So 1014 2022 model on the 32nd. Yeah, that was clean. That was a 369 time. 1014 is a 6. I'm not gonna mark that out though, but just taking a mental note, right? That was a 369 time. 1014, that was a 6. Sometimes just take mental note of it, right? So I think we're good there. Okay, what next, guys? What should we look at next? Is anyone still watching? Let's see if anyone's still watching. Maybe I'll take another break. I don't know. Depends on how many people are watching. 3 watching. Let's take a look at the first percent for value gap. As we said before, when that first percent for value gap got inversed, that was a nice trade. I probably should have just jumped on that right away and then just once again taken another small scalp type of trade. As always, I don't need to shoot for these big crazy wins, and this is something I really need to work on, because let's say I took 2 to 3 2R trades, or even less, 1.5R trades, but I took 2 to 3 of them in a session. All of a sudden I've racked up like 5R, 4R. And so I gotta stop this mindset of I have to hit the 5R, I have to hit the 4R. No, I could just take 2Rs and 1.5s, and I could take 2 in them. I could take 3 of them in a session, which are very realistic, by the way. It's not unrealistic to take 2.5s and 1.5Rs and 2Rs. I really don't think so, as long as you have a good trade, right? I don't think it's unrealistic. Taking this first percent for value of inversion, let's actually mark it out like that. Like, we can rack up 4R in a session without even taking a loss, and all of a sudden we're cooking. So there's no reason to feel like I have to go for the huge win when I can just focus on small wins, adding them up throughout the session without taking a loss, and then bang, I'm at 4R. Bang, I'm at 3R. Bang, I'm at 5R, right? That's huge, right? I don't need to be perfect and take that 5R trade. So that's something to consider, right? I gotta work on that. Let's actually just mark it up like that. Ooh, let's make this a new template. This is nice. So first within for value gets inverse. We obviously have trendline liquidity here, and then boom, right there, right? How simple of a trade is this? How simple of a trade is this? What even is this? This is, once again, 2.8R. 2.8R off of one simple trade that was very realistic. And so why am I having to go crazy? Why am I having to go crazy? I don't know. You could even take profit here, and that's still 2.5R, right? So once again, small wins add up. I don't need to go for anything crazy. So first for value gap, getting inversed right there. That was clean. Right up to the LRLR. Very, very nice. And I didn't know for sure if I was going to be LRLR or HRLR, but either way, yeah, it was a good trade. Snowman called it out live, so shout out Snowman on that one. And guys, I do want to start making market recaps again every single day. I'm going to really work on making sure I do that because I think it's important for future people who want to know what happened on any given day, you know? So what is this? 9:48. Is that a 369 time? That'd be crazy if it was. It was a 3. It was a 3. So that's kind of cool, right? I think that's worth noting, right? This happens at a 3. 9:48 is 21 equals 3. I don't know if it's worth marking now. I think I'll just keep it in my head. I don't need to record it, but we're just taking mental note. Like, yo, that was a 369 time. That was a 3. So just taking mental note of that. 9:48. Inversion for value gap. I think I'll just call it regular inversion for value gap, even though it's a special kind of inversion for value gap. I think I'll just mark it out as just regular inversion. I don't need to make, I don't know. It's just, I'm just gonna try and keep things simple. So inversion for value gap on the 1 minute at 9:48. And bang. So let's go ahead and save that. I'm going to actually write down 9:48 as a key time, right? That's a time when maybe you could expect something like this, like something subtle, but if it happens at 9:48, like, yo, that could be helpful, that could be relevant. It's going into the macro. So that's a 3. I'm going to put going into the macro could be an IFG or something like that. Okay. My mom's calling me. I'll be right back. Hi. Okay. All right, I'm coming. All right, guys. All right, bye. I'll be back in a little bit. I'm gonna go eat some food, and then I don't know how long it's gonna be, but I'll be back. So just go take a break or whatever. Alright. Let's keep going. I don't know, I'm having fun, guys. I don't know about you guys, but I just enjoy backtesting. I don't know what it is. It's nice. It's just chill. I don't know why I'm not listening to music. I should be. But honestly, guys, it's very important to really pay attention to low time frame market structure. Like, you know, by the time we break out this low, what up, Brewster? How's it going, bro? I'm gonna be listening to music here, but you know, the more I think about it, like, sometimes you just like you don't want to get attached to high time frame movement too easily. Without looking at these, you know, low time frame breaker structures matter. You can see we break out this low, and then we, you know, even though this inverses, we get this breaker structure, then we break down. So anyway, there might have actually been there might have been another 2022 model up here actually. Now that I think about it, right? We break this 1 minute low. Now I'm curious. Now I'm curious, right? This is a very obvious break of this low. So, and it actually is flow state as well. Why was it flow state? Because 1 minute change in state wow, that was a perfect flow state. What the heck? Wait, no way. Okay, we gotta chart this one up next because this is pretty cool. But or do I wanna? No, let's start out with flow state because this is kind of cool, right? So remember we talked about that 15-minute fair value gap. Kirk was saying, right? 15-minute fair value gap right here. Why is this fair value gap powerful? One reason is it's overlapping with this breaker, and I actually had this marked out way earlier in the session. I don't know why I got rid of it, but I should have kept it on the chart because clearly it was significant. And I don't know, I forgot to press play on my music. I don't know why I got rid of it, but you can kind of use a higher time frame breaker and fair value gap as your higher time frame PD array for a 1 minute change in state. You can do that. So check this out. Oh, my phone needs to charge. So honestly, I should not have gotten rid of this breaker and fair value gap in hindsight. Like, clearly it was a huge block in the road for price action. So once again, breaker, lowest down close candle, fair value gap, right there. I kind of want to see, like, did we rebalance equilibrium of this? Let's actually first let's redo this template. We might have, one reason this was a powerful one was probably because we rebalanced this. Yeah, look at that. So it's not only just a regular breaker and fair value gap, but it's a premium breaker and fair value gap on the 15-minute. So yeah, I'll just call it a breaker because it's not fitting on the chart. But yeah, 15-minute premium breaker of that displacement leg. So dropping down lower time frame, right? We have this 15-minute breaker, 15-minute fair value gap. What happens next? We sweep out the highs, right? All these low resistance highs and this high and the internal high. We end up getting a 1 minute change instead of delivery. And dang, when you look at it like this, it's like, wow, this was so obvious. 15-minute breaker. Here, we'll actually, now we have space to mark this out as premium breaker. And then 15-minute premium for value gap. Why does that text look so much nicer? Because that is also italicized. So, right, we get this sweep extending above this high, change in state. Honestly, maybe we mark it out as a sweep of these highs. It really doesn't matter. It's a sweep, right? We obviously sweep out highs. We get a 1 minute change in state. Let's mark it out as that. 1 minute change in state here. With such a long wick. So this is very nuanced. It's very nuanced, but with such a very long wick here, I would use the wick of the red candle. I don't know, it's just a screen time thing, but I would use that. You can see OTE of that is where perfectly we react. So this is the sniper model. And honestly, you could target 2 projections. So 2 projections down like this. Or even 1 projection. You could also target, you could have targeted 3 projections, you could have targeted 4 projections. 4 projections hit perfectly, but you would have had to held it all through this, and that would have been not so fun. But you can see how perfectly each projection holds price down, right? This is pretty cool. And then, yeah, 4 projections down. And then, what do I always say? The 7th standard deviation is going to be very sensitive. What occurs? 7 standard deviations down. Bang. 7th is sensitive and 8th is sensitive, right? Bang, 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 bang. So 1 minute change in state right there. And we'll mark this both out as sniper model and also regular flow state. So regular flow state would be like this, shorting on the retest of this. So we basically have about 1 candle. You have about 1 candle worth of room. This is a 369 time, just taking a mental note of that. Once again, you guys have to realize how much harder it is to catch this live than it is to chart it up in hindsight. It's very easy to chart up in hindsight. You know what I mean? Because you can clearly see it happened. But to hold through this candle, oh, now that's scary as heck, right? That's hard. That's what makes trading hard. That's what makes trading live so much harder than recording something down in hindsight, because you have all these emotions that come with this candle, and you have to follow the system exactly as it should be taken. That's not easy. That is not easy to do at all, but you have to take the trade exactly as you backtested it. Not easy. So let's just show how this delivered us lower. So 10:04 flow state, retest, 15-minute aligning with the 1 minute. And then let's also mark out sniper model, right? Meaning basically we take OTE and we enter OTE. This is Jake trades at OTE, right? Where you basically take OTE of a flow state. Sniper. Once again, not easy to do. But note this was also a 369 time, right? So we're going to mark this out as a 369 time, right? So it was a 6. Nice little additional confluence. So sniper model at 10:05. Sniper, 15-minute aligning with the 1 minute. Bang, save. Okay, what's cool is we could. What's so crazy is you can just go fractally down, time frame by time frame. I could go down to probably like a 15-second or a 5-second chart if I want to, and look for a confirmation off of this. That's the craziest part about trading, honestly, is it's just all perfectly fractal. I could do this on a high time frame too. And so we get a sweep of the high, we get change in state on the 5-second here. So let's just say that we aligned this with a 5-second change in state. Once again, with these nuanced, not really perfect, there's not really like a specific PD array here. It's just kind of like I'm just aligning it. You kind of just have to. I don't even know what the word is. Like, there's no specific aligned time frame change in state with this sniper model. I just have to say, okay, what's the context here? Well, 5-second change in state, right there. So yeah, with sniper model, I'm gonna make a note of this right here. When aligning a CISD with sniper model, 5-second CISD, I don't even know, sniper model, just like NDOG, there's no specific aligned time frame CISD, just use the context of the trade. So this is manipulation. And this is inducement. Do you guys see this? Yeah, I'd enter on that close. This nice displacement. Stop like that. And then I guess you project this out. 2 projections. Wow, that's a 4R. Whew. Not bad. Not bad at all. That's the power of aligning time frames. So how is this AMD? Accumulation, manipulation, inducement, change in state. So we should maybe mark out how this is a 1-minute change in state, because this is the power of aligning price, guys. It's honestly beautiful, right? It really is. We have a 15-minute PD array, a 1-minute change in state, sniper model, and then 5-second change in state back down. Does it just make you smile? Like, what? Here, let's get rid of this. Let's just make this like a darker. That's so cool. Look at how we align time and price. I don't even know what to call this, but this is cool. Imagine if I took this. People wouldn't believe me. People would be like, that's a lie. Flow state off a sniper model of a flow state. I guess to simplify things, let's just call this a 5-second CISD close, because I don't want to have to put flow state, 15-minute, 1-minute flow state, sniper entry, flow state off the sniper entry. My brain can't comprehend that, so I'm just gonna put 5-second CISD close. CISD close, 5-second. And it's right out going into 10:08. Anyway. Time and price aligning is crazy. Yeah, 10:07. CISD close, 5-second. Backtesting is so cool. I don't know how people don't think backtesting is cool. Like, this is crazy. Like, what's the power of this? You get in and you get 2R, 4R, 6R, 7R, 8R, you know? It just keeps going. Alright. What do we look at now? That's why higher time frame drawing liquidity is important, because we were drawing lower. But then we actually reversed here, which is, I don't know, somewhat surprising, because did we take the RTH gap? No. So what will probably happen is we fill this one, but then we dump again, because we got to fill these two. We got to fill these RTH gaps at some point, and it's looking like we already kind of like broke out the low. So now I think we could fill this RTH gap and then maybe go lower off of that. I don't know. We might have already filled the RTH gap, honestly. What do you guys think? Hey, there's still 4 watching. Let's go. Obviously, guys, obviously a lot of the trades I backtest are unrealistic, but it's because I just am obsessed and fascinated with the market. I don't know. The perfection is insane. And I don't know if that doesn't fascinate you, then I don't know, man. That's crazy. What do you guys think? Maybe there might have been a way to catch this. Oh, we talked about this. This was that Vol model, right? Where basically we had high resistant liquidity. We're above both the true opens, and so you could take this as an inducement into the high resistant liquidity above the true opens, down to the real drawn liquidity, which is data low. We talked about this. This is Kirk and I discovered this a couple weeks ago. We named it after Vol model, or after a Vol, because there was like a Vol, like a little mouse thing in my mom's window of her workout room, and it was right as we discovered it. And it's like, yo, it's kind of like digging into that HRLR, and well, those things like to dig. So what do we do next? I don't know. Maybe there was another trade-off market open that wasn't that. Let's look around. Obviously, there's PM the back test, but we could do that maybe later on a day that's not like on the weekend or something. So yeah, so the nice thing about this is actually there's SMT going into that. Yeah, that's crazy. Um, but yeah, market structure is actually very important, guys. Like seriously, like let's just do a little market structure exercise, right? I just want to show you guys how important market structure actually is, because I didn't even realize this for the longest time. But like market structure is really, it's just displacement, right? Where's the market displacing? This is key for base. This is why TGR entered on the break structure, because it's like, I mean, it's telling you where the market's going. It's going lower. Then we break this high. We break this high. It's no longer, well, it's no longer lower lows. It's higher highs. So the market is delivering higher now. So market structure can be very valuable. And then once again, what happens here? We don't really break structure until when? Here. And now all of a sudden, this is bearish. And so this is like a really great example of market structure really helping you understand at a deeper level what is going on in price action. And yeah, this breaks to the upside, but what's this? A gap. So market structure was still bearish. So I'm gonna just make a little note of this, like basic market structure is very useful to figure out where the market is displacing towards. See that? And then every single fair value gap after we get those structure shifts is just gonna be it's gonna be valuable. Maybe we could look at PM. What do you guys think? What should I look at? Yeah, I guess there's only so much to look at from the AM. We could also look at London. Man, okay, this was crazy. We talked about this a little bit. Did I journal this? Because this was crazy. Okay, we gotta talk about this because, oh my gosh. I didn't even journal it yet. This was probably one of the craziest trades ever. Like, one of the best trades I've ever seen, actually. And I saw it right on stream, but unfortunately it was obviously before my live trading window, so I couldn't really do anything. I don't know, trades like that definitely make me want to consider, like, allowing myself to take a trade during that 7 a.m. hour, because I've seen good trades happen there. I don't know. It's still, the way I trade is still constantly fluctuating. Whether I decide to do that in the future, I don't know. Kind of still just figuring it out. But the main thing, from what I can tell, that I really want to do is one loss max per session. So if I took a loss at 7, then I think I'd have to be done for New York. That's probably what I'd have to say. I think that's really the main takeaway from... Oh, wow. So midnight was all the way up there. Okay. So, first of all, 7:30 manipulated right there. So that was the first thing. And we ended up getting SMT with this high. Right? This is a pretty big SMT. Like, you can't hide from that SMT right there. That's a pretty big SMT. Whether it's a real, like, whether it's a full 6-hour SMT or not, it's a let's just call it London SMT just for simplicity. Right? London SMT. Okay, then what? Sorry for all the lines on the chart, but we're doing a little brief exercise here, and then I'll get rid of the lines. So London SMT, and then what's this? 752. Okay. So this is our true session open. That gets manipulated here. Now we can get rid of all the lines. We might have to drag them out for the 22-minute one, but again for the 22-minute one, but for now, right? We're just gonna look at this. First of all, by the way, this was Phoenix model on the 15-minute, right? 15-minute rejection block, consequent encroachment, tapped, CE tapped perfect, or pretty well, right? So that's something to consider. Actually, let's actually use that as a confluence, right? We have a 15-minute rejection block with SMT. Hey, what up, Javier? First, I've been streaming already for like over an hour. But hey, Javier, we love you, bro. We love you. I'm trying to mark out this rejection block with the correct template here. Okay, so this was a Phoenix model. So I could just mark this out as Phoenix model, but as you guys know, sometimes you want to wait for the line time frame change to stay out of a Phoenix model just to be safe. So now that I'm actually thinking about it, so what's the name? What did we decide the name was for? If Phoenix hits consequent encroachment, we were calling it Phoenix Mini. I want a new name for it. Did I ever decide on it? The Phoenix Plus, maybe? I can't remember. But yeah, we sweep out the high. I don't want to call it Phoenix Mini. I don't have a different name though. Yeah, today was pretty good. I guess I'll just keep calling it Phoenix Mini because I don't have a better name. I'll keep thinking about a better name, but for now, this is still Phoenix Mini, where we hit consequent encroachment of the rejection block. We break structure, right? So, first things first, 730 gets manipulated. You see that here. Break of structure. Then what? Then we have, instead of a fair value gap, we have a suspension block. 2-minute suspension block. So this is in replace of the fair value gap. It's instead of a fair value gap, we have a suspension block. And then we could take this 2-minute suspension block, align it with a 10-second change in state. And this is exactly what I was getting at, guys. I thought this was so nice. And once again, for those who don't know what a suspension block is, it's basically when you have a candle suspended in between two volume imbalances like this. Review my trade. I just took it based on my conviction, but it'll be cool to see if any ICD concept came out. Yeah, for sure. So you can see how this candle is suspended between two volume balances. That's suspension block, right? So that suspension block is being used instead of a fair value gap here for a 2022 model. Let's shift this up just to fit this text in better. And then 10-second change in state. And why would you be bearish here? We had the high time from SMT, and then we have such good liquidity below. Such good liquidity. Honestly, like, oh my gosh. Literally makes you want to, like, this is crazy. This is so clean, right? All these low resistance lows. And then we should also look at one last thing, right? One last thing is, let's look at 758. So 758. Oh, that's the cherry on the cake right there. Oh my gosh. No way. So 758, that's the, I probably have a template for it. 758 is the 22-minute true open. Oh my gosh. This makes me want to cry. This is so beautiful. This is like, it's incredible, guys. This is incredible. Oh my gosh. Right? And so you see how first 730 gets manipulated. We have Phoenix Mini at the top. We break this low, bang, with displacement. We actually rebalance, by the way, to what? Probably equilibrium. I don't know for sure. And I'll look at your trade after this, Javier, but I want to review this first because this is so cool. Equilibrium there, also equilibrium here. So we rebalance the equilibrium. 2-minute suspension block. Let's write this whole thing out just for the sake of giving it respect. This is incredible. Incredible. 2-minute suspension block. And then what? And oh my gosh. Wait. By the way, this is also a 1-minute change in state out of this. Let's actually mark that out first, right? So with a 15-minute rejection block, we do get 1-minute change in state. Let's mark this out right here because that's the aligned time frame. Or we can mark it out like this too. Okay. Very obvious generated liquidity here. What happens next? Let's just mark this out like this. This is just beautiful. Right, so manipulation here. And then what? Inducement here. Yeah, this is just beautiful. Honestly, let's get rid of the extra lines because I don't want to have to confuse anything, right? Let's keep it simple. And then 10-second change in state. Right there. Undeniable. 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 Time and price aligning in the most beautiful way it gets. Undeniable. Man, I can never get through everything I want to look at. Do you see the different stages of AMD though? Right, we have all of this is accumulation, manipulation here, then a lower time frame accumulation, manipulation, which is an inducement, then a change in state. And it's just like perfect. Okay, let's go ahead and screenshot that. Javier, are you still here? Do you want me to review your trade? If so, say yes, and I will. So it's a flow state close, 2-minute 10-second at 8:07. All right. Might take another break, guys. I'm getting tired. Let's go. We got a sub. Oh, there's 5 watching. That's a lot. Okay, Javier, if you're still here, type 1 in the chat if you want me to review your trade. I want to make a market recap tonight. It's getting late. I do want to make a market recap tonight. So I'm gonna quickly go to the bathroom and then I'll scan through some more trades. Then I'm just gonna, honestly guys, I'm gonna start not taking the market recaps so seriously. I just kind of want to pump them out every single day, just so future people can have a quick, concise recap of the day. And that's just, I don't know, I think that's a pretty nice thing to document. So I'm gonna go to the bathroom. All right, Javier, you still here? Oh, Javier didn't respond. Okay. Well, in that case, I'm gonna keep backtesting. I'm gonna try and just get a quick mental map of the day, really just understand what happened, and then make the market recap. So what happened for the day? Let's get into it. So first things first, short, you're gonna short. Oh, this was your trade. Short at 26,161 retest of 1800 New York CDO, and time of entry was 10 a.m. New York. Okay. 26,161. You shorted like in here. Okay. Yeah, so that's interesting. Yeah, the main thing I noticed from here, from an ICT standpoint, right, is It was a rebalance to equilibrium of this bearish price leg. You can see that that was rebalanced to equilibrium. It was also probably OTE. Yeah, I mean, that was pretty nicely OTE here. And then what's this? A 15-minute breaker, a 15-minute for value gap. So, you were definitely in line with ICT, bro. I mean, 15-minute breaker right here, 15-minute for value gap. Mark Asia 18 o'clock open from yesterday. Oh, that's interesting. Yeah. Yeah, so I kind of marked out the trade that I thought was from like an ICT perspective. Yo, that was an end dog at the top. Yeah, so that was an end dog at the top too. That's kind of cool. I didn't even realize that right at the moment, but or right when I first marked out this trade, but this actually was a new day opening gap. You know what? That actually makes me wonder, man, we're going down a rabbit hole now. You opened up a can of worms, bro, cuz now I'm like, "Whoa, that end dog tap was nice." That you know what the end dog tap means? When we tap an end dog like that, it usually means that there's like some quarterly theory trade that comes off of it. It's usually what happens. Usually there's some kind of SMT with it, and then um, anyway, end dog. So we tapped that new day opening gap, which is kind of cool. Oh, I might need to name a new type of trade for change in state out of an end dog, because honestly, it's pretty powerful when it happens. It happens quite a bit. Honestly, yeah, we need to make a new name for it. 'Cause this happens a lot, guys. I'm getting distracted. We need a name. We need a name for this. Okay, change in state off an end dog. This happens a lot, guys. It just does, right? Or you'll get a change in state off an end dog. First we run these LRLR, then we come up, retest it, and then continue. So I probably go like this. I don't know, I'll have to think of a name. This one's not an obvious one, so I wouldn't take this, but I'll have to think of a name later for like perfectly reacting off an end dog. Okay, so to recap your trade, you shorted at retesting Asia high. What I like about that is basically you were in that 15-minute for value gap. You're in that 15-minute breaker. We tapped the new day opening gap, and at this point, it's just obviously a giant inefficiency in price because there's a gap clearly from this low to this high. This is a gap. Like, you could just look at it from this perspective and just see, oh yeah, this was a gap. Like, the bodies respected it, kind of. So from that point of view, I think, you know, it made sense to short within this area, 100%. Yeah, all I have to say is it definitely aligned. But I don't know. I don't know all the context of the short, but it's definitely seeming like it's aligned, bro, with ICT concepts. Okay. So let's do a quick overview of the day so I can do this market recap. Okay, so what ended up happening? You could have gotten 326 points. That's just crazy. That is insane. Wow. Okay, so I think some of the main takeaways are, first takeaway is it was important going into the day to understand the bias should have been pretty clear when you saw this 12-hour CRT, because it's a very simple idea, right? We swept out the high of the CRT. we would probably come to the low. So that's thing number one, is 12-hour CRT was useful for bias. Let's make a note of this. So that's the first thing I will say, was useful for bias. And I talked about that live, and I called it out live actually. And you know, just because you know the bias doesn't mean you're gonna necessarily catch something, but we did call the bias out, which is nice. 12-hour CRT for bias was nice. Then, right, as well, we had the data low. This was nice for bias as well. And yeah, basically I would not recommend longing until that CRT was really probably complete. That's probably what was going on. I probably have enough to do like a pretty simple market recap though. I don't need to get too in depth. I can just talk about, you know, basic stuff, what I saw, what I noticed, things I learned, and I don't need to make it too complicated. So yeah. FOMC data low. Delivered. Our FOMC data low was a nice draw going into the day. Thanks for reviewing, bro. Of course, bro. Yeah, I want to start doing a market recap or review every single day, because I just think in the future, like, to have every single day thoughtfully recapped by someone, it's cool. It's cool to have that logged. 100% cool. So I kind of want to be that person. You know, obviously I can't cover everything in a single day, and I'm probably going to miss a lot, but I think it's valuable stuff. So honestly, I feel like I have so much to cover for this. I think I can honestly make the market recap. I mean, we have that short to go run those lows. That was crazy nice. We knew the bias going into the morning, right? Then we had the CRT to the upside, the breaker and provide gap back down, then the 2022 model, and then in PM, I don't really care. But that's basically what happened. So, all right, guys, I think I'm going to go ahead and film this market recap. And, yeah, I want to consistently make it every single day, ideally. So, yeah, let me know how I can make these better and if you guys enjoyed. And once again, my camera kind of broke today. Like the template broke for it, so I can't switch it easily. But anyway, thank you guys so much for watching.